All right, let's get started. Today, I'm going to share with you how much house you can afford if you are on the path to financial independence or considering retiring early. You're not going to want to miss this. Many people dream of buying that perfect home one day, and the past few years, the real estate markets all over the United States have been going crazy. Prices are at an all-time high, and it's difficult to actually find something that you can afford and you want to live in. Now, along those same lines, if you think back maybe 10, 15 years ago, the housing market was similarly at an all-time high, and then everything came crashing down. Many people found themselves unable to pay for the homes that they have taken mortgages out on, even sometimes a second or third mortgage. So as a result, there was this new law put into place called the Qualified Mortgage Rule. Essentially, it was legal protection for lenders to make sure they couldn't be sued for giving people bad mortgages. However, what we're about to discuss today is even though there are protections in place, sometimes you may find yourself approved for more than you should really take out. So let's go dive into the numbers so you can figure out for yourself how much house you can and should afford on your path to financial independence. Now, one of the first things that everyone has to figure out is their monthly gross income. Essentially, you have to establish how much money you have coming in every single month in order to establish what type of mortgage you could pay each and every month. Now, I'm not going to throw a bunch of numbers at you, but let's just say we have a person who's making $60,000 a year gross. That means that they're taking home about $5,000 a month. Now, if this person has a partner or a spouse and they're making the same amount, you could go ahead and double that and say that they're taking home $10,000 a month gross monthly income. This number is going to become important for a number of reasons, so just keep that aside for right now and let's move on. The next number that we have to figure out is your monthly debt payments. Now, for some people, this is going to be very straightforward to figure out, especially if you only have a little bit of debt. For example, let's say you have a car payment or a lease, maybe a student loan, maybe a little bit of credit card debt. You're going to add up the monthly minimum payment for each of those debts. Again, just to keep numbers very simple, let's just say that the monthly debt payment is $500. Now let's put this all together because in order to get a qualified mortgage, you're going to need to figure out your debt to income ratio. Now, for the purposes of our very basic example, you have someone with $500 in monthly debt, but they make $5,000 pre-tax income. So essentially, when you divide the debt by the income, they're paying about 10% of their income, $500 per month on debt. So here's one of our first big aha moments that you're going to want to avoid. Many banks and lenders will actually approve you if you have a debt to income ratio of up to 43%. That means for every dollar that you make pre-tax, you're going to be spending 43 cents of that on all your debt and your house. Now, the crazy thing is that doesn't include taxes owed. It doesn't include retirement. It doesn't include going on that vacation, childcare, even putting food on the table. So be very careful when you first start talking to some of these banks and lenders about what you can quote unquote get approved for, even in terms of a qualified mortgage, because sometimes you are going to end up house poor without any extra money. Moving on, the next thing for you to be aware of is your credit score or FICO score. Your goal is going to have that credit score be about 720 or higher. Even 760 and higher is better. And at that point, you really aren't going to get much more of a better rate than the lenders can offer. If it's below that, of course, they may give you a worse rate or a higher interest rate. But one of the things for you to keep in mind when you pull that score is you need to see where you're at, if you're applying with a partner, where they're at, and then realize that if you're at that 720, 760 and above, you're probably going to be offered the best going rate. Now, I want to keep this short, so one of the last things for you to consider is your available down payment. Now, when I use that term down payment, this is money that is going to go towards the house, but it also has to be available in liquid to pay for things like closing costs. Okay, let's just say for the sake of argument, you have something like $25,000 saved up and dedicated as your down payment towards the purchase of your home. Well, a portion of that, anywhere from 3 to 5%, could go towards just closing costs. So even though you have that money saved, some of it is going to go towards the costs associated with purchasing a home. Now, many people might be thinking that you have equity in your current home and you want to put that towards your new home. And the idea you're thinking is absolutely spot on. And the answer is yes, you can do that. However, you do need to keep in mind that you are now going to be a contingent buyer, meaning that if you are counting on the money and equity in your current home to put towards the purchase price of your new home, then you're going to have to make an offer on that new home and let the sellers know that your offer is contingent upon selling your old home. This happens all the time, so it's nothing to be worried about. But please just keep in mind that this contingency will be in place, and both the buyer and the seller have to accept this. So all things considered, how much home can you actually afford? Well, everyone's numbers, the down payment, the monthly debt, even your income is going to vary. So I'll leave a link down below to a really awesome mortgage affordability calculator. I love using this website because it has these little sliding dials where you could put in things like the price of the house you want to buy, if you know things like the taxes, if there's a HOA fees, anything like that. But what I will tell you is to be careful even of the projections on a calculator like this, because just like the bank, they're always going to be higher than what we want to aim for. So let's go ahead and dive into the numbers. One of the first things you're going to want to do is type in your zip code so that they know where you're looking for a house. For the sake of this video, I'm going to type in 90210 Beverly Hills, California. Feel free to type in the zip code of where you're looking for a home. Sometimes things like taxes and fees are going to vary slightly, so you might get slightly different numbers depending on what part of the country you're searching in. Using our example from before, let's go ahead and use this couple, each person making $60,000 a year. They're going to have an annual household income of $120,000. Now remember, they have $25,000 for their down payment, but that is going to be eaten up by some of the closing costs. And remember, they have other monthly debt obligations of right around $500 each, things like maybe a small student loan or a car payment. So let's go ahead and put $1,000 monthly debt. Now, if you've made it this far in the video, I'm assuming that you have good to excellent credit. I'm going to go ahead and click that excellent credit mark. That's going to get us the best rates possible currently. As you can see here, this couple is able to purchase a home well over $400,000. But their monthly mortgage payment is going to be in excess of $2,500. Now, one of the important things to keep in mind is this couple is bringing home $10,000 gross monthly income. However, they are paying out 36% or $3,600 in monthly debt payments. So here's the big reveal of this video. This is still too high. We want no more than 25% of our gross monthly income to go towards our monthly mortgage payment. If we're on the path to financial independence, if we're looking to maybe retire early, to have that millionaire mindset and still live a good life, then we do not want to be house poor and not have any money left over for other things in our lives. Therefore, let's put a cap on the total monthly debt payments, including the mortgage, at 33%. In the case of our example here, that would mean that they can spend no more than $3,300 a month on debt, and that includes their housing payment. As we can see here, this mortgage payment at this purchase price with the amount of money they have to put down is just a little too high. This looks a little bit better to me. If we can bring that total debt to income ratio down to 33% and they're only paying 25% towards their housing costs, then they are going to be well on their way to financial independence. Now, as you can see, this lowers their purchasing power, and they may be tempted to say, oh, let's get that bigger house, or let's just put in a higher bid. But I would caution you to do that because you're going to be paying year after year on this mortgage, and you may not have funds left over for anything else. All right, let's wind this thing down. I wish I knew how to work through these numbers when I bought my first property. And even friends and family that sometimes ask me for help, I think it's very important to walk them through the idea of calculating your gross income, your monthly debt, and coming up with a ratio that actually feels comfortable, as opposed to looking at those beautiful pictures online of that house you wish you could afford and then ending up in it with no extra money left to do anything else. If you're thinking about buying a home, remember I left a link down below to that calculator. You can simply slide it over, adjust some of the other costs, and then that way you can decide for yourself where your other monthly debt obligations are and how much of a house you can truly afford and in which area you want to live. All right, please be sure to like this video, and if you're new to the channel, hit subscribe and ring that notification bell. It's interacting with you down in the comments and seeing all of the views month after month that really helps keep me going, so thanks. Also, I am available to book for a private one-on-one consultation call. Hopping on the phone and working through the numbers like we did in this video for your personal situation is something I do all the time, and it really helps provide some clarity and maybe separate the emotions from the numbers. So if you're interested, I'll leave a link down below to book me for a call in the description. And our Facebook group just continues to grow, so feel free to join that, and we'd be happy to have you. All right, as always, I'm Rich, and until next time.